Welcome to Share Views, brought to you by London South East. I'm Donald Leggett, and Leo Koot is with me today to discuss his buy and build strategy. As you know, Leo has been executive chairman of Columbus Energy, the Trinidad oil and gas explorer, developer and producer, for about a year, and he's already done 3 deals. Welcome, Leo.
Thank you very much, Donald.
Without a doubt, you've been very busy.
We have been. It's been a hectic year and a bit. When I started, the company was a field and a non-operated field and a lot of trouble, but we managed to get it to where we are now.
Yes, so it says here that when you arrived in Trinidad, you inherited what sounds like a tired old oil field called Goudron and a half of Icacos. So what was the attraction of that? Why did you join what then became Columbus?
I need to thank Goudron for this, because what he did is, when he introduced me to the company, he said, well, don't look at all the press and all the blogs, just look at the fundamental assets. Have a look at the subsurface environment in Goudron, have a look at Icacos, and have a look at the potential we have in the Southwest Peninsula before you start reading up on LGO, the name of how the company was named.
So what did you see? What was the potential that attracted you?
Yeah, so what I saw is the bones of a potentially very successful company. We had the potential to build up production in the Goudron field, and that production then can be used to invest in exploration in the Southwest Peninsula. So that was a strategy formed very early on when we started in May 2017.
And then fairly rapidly you renegotiated Bolt. Now, what was the problem with the original deal, and why did it need renegotiation?
So that was the first tranche of our growth element in the Columbus package. The problem with the Bolt deal is that the company had not negotiated with the landowners. And in the Southwest Peninsula, it's a bit like the American system, where the landowners also own the mineral rights below their land. So there was a series of companies and entities between us and the landowners, and I was completely uncomfortable with that. There was a lot of value siphoned off at each layer, a lot of royalties paid, so we had to start from scratch.
And how long did it take to actually negotiate that
deal?
That
was a long, hard-going negotiation, a very fascinating chess game Tony Hawkins pulled off. But in the end of the day, I think the negotiation took about 6-7 months.
Did much money have to change hands?
We have a very clever strategy, and effectively we're completing the deal now. And the initial consideration is approximately halved. Good.
So you've done well.
Yeah.
And then you moved on to Steeldrum. Steeldrum seems, in its own way, quite transformational for you guys. It's completed a couple of weeks ago, and strategically it's just so very useful for you. It fits so nicely into Goudron and all the other things that you're doing. And it sorts out the Southwest Peninsula for you. Tell us more.
It does. So to follow the timeline, after Bolt we did the Icacos deal, so now we're 100% operating in Icacos. And if you look at the map of Southwest Peninsula, you've got Goudron, Bonas, Southwest Peninsula and Icacos. The piece in the middle was owned by Steeldrum, so we had our eyes on Steeldrum for a while, because we are prevalent, all our operations are in the Southwest Peninsula or in the south of Trinidad. So it was an obvious acquisition for us. I got talking to the shareholder, the Norwegian shareholder. He very quickly was convinced that we are on the right strategy. We are the right team to also take his business forward. So that's when the negotiating started. And to be honest, that was a very quick deal. We saw eye to eye, and we made a success of it for both companies.
So how much have you paid for Steeldrum?
So,
and was it shares only? And if it's shares only, then the Norwegian guy must really have believed in your strategy.
Exactly. So the Norwegian investors, they really believe in what we're doing. the deal was paid will be paid in shares, and if you at the time at the share price then the consideration was around $5.6 million US, and that if you look at the amount of reserves added, it means that we paid less than $1 per barrel. So that is, I don't think there is a deal done out there this attractive.
But basically, the Norwegian investor believes that you're going to be good for his business.
Yeah, yeah. So collectively, the combined business has got a lot of value potential. Now we've got the opportunity to high grade and deploy our capital where we get the biggest bang for our buck. Interestingly, in the whole portfolio of 5 producing fields, there's violently changing economics. Some fields are nearly twice as profitable as other fields. So we'll be targeting those fields, particularly that's probably Bonas, South Arran and Icacos. They're very attractive commercially. So we're going to be very clever in our capital allocation programs and make sure we get the best return for our shareholders.
And you're almost up to, you hope to be up to 1,000 barrels a day by the end of the year.
Yeah, with that strategy and that focused capital allocation, we believe that we can be in excess of 1,000 barrels by the end of the year, which is an important number.
Why is that an important number?
Because before we were playing in the hundreds, and for a company, an E&P company, to be successful and have a say in government negotiations, you need materiality. Below 1,000 barrels, you are really a small company. So now we are in the big league game, especially for Trinidad.
Okay. How did you finance Steeldrum? It was done through the Lint facility, was it?
No, so it was a share deal. So we'll issue shares when the transaction completes in 2 months. The Lint facility is purely to keep Goudron happy, Goudron, our CFO. With an acquisition, there is uncertainty, but I believe the risks are, as what I mentioned before, a plane falling on top of Goudron's head. But now he's got funds available in the event we need cash, and we see opportunities to accelerate our program.
It's a backstop.
It's a backstop.
Just in case.
It's a just in case, yeah.
Ah, okay.
And it's a very attractive just in case.
A very attractive just in case. Okay,
Yeah.
I understand. Okay, now you're an ambitious man, and strategically you're keen to do more M&A. Now, is that more M&A in the Southwest Peninsula, in Trinidad altogether, or in the presentation you did with us recently, you were mentioning South America? I have to admit, both eyebrows went up when I heard you discussing Trinidad, using Trinidad as a hub for accessing Venezuela and et cetera, et cetera. So tell us more.
I like your buy and build analog. I would like to add to that we also build production organically through our field. So that's a side note.
It's true. You're organic as well as buy and build.
So it's both. So it's organic growth and M&A. I see 2 main plays. There is 18 small operators in Trinidad itself, which is like a scattergun approach. The Trinidad will benefit from getting companies together. Consolidation, rationalization of the current operators.
Sure. Economies of scale is what you're about.
Absolutely, that's critical. And you need to be producing at least in excess of 500 barrels to really make some money there. So there's a consolidation play. We got good relationships with all main stakeholders. The larger, exciting M&A is in South America, as you mentioned. We want to use the expertise we've built in Trinidad, which is land-based oil production, relatively shallow reservoirs, stripper wells. If you look at South America, Colombia, Venezuela, Guyana and Suriname, that's where there's a lot of land-based operations. We think we're good at that. As you know, Trinidad is just 4 miles away from Venezuela, from the whole basin. So I'm confident we can add a lot of value to those deals. And then we're talking material deals. We want to go to thousands of barrels production.
So I have to ask you about management stretch, because it seems to me that there is only one Leo Koot. That you've done very well with what you've done so far, but if you get bigger faster, isn't there a danger that you don't quite have the manpower to integrate and to cope with it all?
That some people consider it a risk. I don't think so. I think our team, if the email sent after the Steeldrum completion, was that there is so much intellectual horsepower in the team. Stuart, Gordon, Tony. If I would not stretch them, they would switch off and go to automatic mode. So these guys, you need to give them a target and somewhere to grow towards too.
But these are the M&A deals, guys.
Stuart isn't.
What about integrating? Isn't it just dull? Consolidating and integrating, making it all work better, and then doing it for 5 years, 10 years?
Oh, that's exciting. That integration piece is very exciting. Next week the whole team, the executive team, is a full week in Trinidad where we will be holding town halls with all the people involved. We will creating one central company culture. There is an opportunity to high grade staff, so there's going to be an organization chart, and then we're going to be making sure that the right people are in the right place. I see this as the opportunity to improve our general performance in country.
So there's a big focus on integration, I've just heard.
Yeah.
Great. Okay, that's very interesting.
Yeah.
What's your balance sheet looking like at the moment? You've been spending money in share deals here and there. How will you finance the new acquisitions going forwards? And is there a danger you overstretch yourself financially?
So our balance sheet is healthy, even with and without the Steeldrum acquisition. Our cash flow was positive from operations. So that makes for a robust business. So you don't need to worry about how am I going to pay next year's salaries.
M&A going forward, though?
So M&A going forward, unlike the Steeldrum deal, I'm talking material M&A, we are always lining up potential investors for the right deal.
Can you tell us what those significant material M&A deals might be?
I can tell you what my ambitions are. I would like to do a deal in excess of $100 million. And I know there's a lot of people then immediately worried, dilution, and that's all going to go wrong. But I want to diffuse that immediately because I also own shares. Half of my salary is paid in shares. I don't want to dilute my interest in the business. I just want to make the business more valuable, and make sure that we get a high.
Do you find that Schroders look at a $100 million deal and go fantastic, and PIs look at it and go that's dilutive? Is that how it splits?
No. The good thing is that Resolution 5 of the AGM was withdrawn. So that means that if we go out to raise money in the market, then we need to give all our shareholders the same opportunity to invest. So if we do a deal and retail investors want to maintain the corner, there'll be an open offer where they can hold their position in the business.
Okay, we've touched on this in a number of different ways in our discussion, but what's the news flow that we can expect? What's your plan in the next months, year, and when can we expect things that are going to kick the share price? When are the announcements going to be coming?
Yeah, so first we'll be focused on the integration. There is low-hanging fruit within the Steeldrum portfolio where we will start boosting their production. The Icacos deal, we see a shallow horizon where there is a lot of trapped oil, so we can get at those. And then our sights are firmly on starting to drill in the Southwest Peninsula. We are doing the technical studies. We've got capital available for drilling the wells in the Southwest Peninsula, and by the middle of the year I expect to start activities there, real exploration activities.
Very good. And my final question, summarise all that for me and tell me what your investment case is. Why should PIs actually put money into Columbus Resources?
We are a safe bet to make a lot of profit. Why am I saying that? Is that because we fund ourselves from our own cash flows. So the company will not get in trouble and go bankrupt. We roll the dice in the casino, in the exploration casino, with money we generate ourselves, rather than going to the market, ask the money from the investors, and then use their money to go to the casino. That's not a robust strategy. We are a safe bet, and a safe bet to make a lot of money.
That's the best investment case summary I've heard. Leo Koot, thank you so much for joining us. That has been a pleasure. That's it for now. Thanks to Leo Koot, Executive Chairman at Columbus Energy Resources. He's just shared his journey with us. It's been quite a year. And thanks to you for watching. For more interviews like this, do please subscribe to our London South East YouTube channel. Thank you.